Research is daunting for most of us. In reality, there are over 15,000 suburbs contending for our investment dollars and even more information. Australia has some of the best property data in the world, but making sense of it all is very challenging. So when it comes to deciding where to buy, where do you start? How do you make sense of the vast information? What information is relevant to your particular needs? We all have busy lives, and just as you're ready, your research is out of date. Good research information is costly. So what do most investors do? They get frustrated and they buy the next property that vaguely looks acceptable, or they buy from a sales organization representing the seller. And that can result in making costly, emotional decisions, sometimes paying too much for the wrong property, or worse off, they'll end up doing nothing at all. So what's the solution? How do professional property investors do their research and keep their sanity? They use Boomtown to select 10 suburbs out of a potential 15,000. They then verify the shortlist with targeted research using specific third-party data and reports. But more importantly, they base their research on the proven principle of supply and demand. A low ratio between available properties and the demand from tenants and buyers suggests prices and rents will remain flat or decline. A high ratio suggests there are more tenants and buyers looking in an area relative to the rest of the market, so prices and rents should start to increase. So how do we calculate this gap in supply and demand and then rank each suburb accordingly? In very simple terms, our algorithm, or the demand to supply ratio, factors in 8 recognized property statistics from across the web. This includes days on market, a good indication of demand when viewed in conjunction with the other 7 supply and demand indicators. Another is auction clearance rate. Few auctions or a high clearance rate can also indicate buyer demand. The ever-popular rental yield and vacancy rate figures are also factored into the overall multi-criteria analysis, otherwise known as the DSR score, which is a score applied to each suburb dependent on their gap in supply and demand. Here's a previous example of how a single suburb compares against all the indicators and how it is rated against certain benchmarks used to calibrate the overall score. The overall score applied to 15,000 suburbs means you can do a quick search based on a score or score range and weed out those suburbs that are comparatively poor. And if you want a better chance of focusing your efforts on those 1% of suburbs with the best indications of imminent capital growth, then we suggest your score range starts at 30 plus, but this also depends on your investment criteria and factors like budget. All suburbs are scored out of a maximum of 48, with most sitting above the market average of 24, and depending again on your requirements, you might consider focusing your ground level research in locations in the higher score range where the gap in supply and demand is larger. We've written a lot on research and the application of the DSR score. Much of what has been published is available for your reading pleasure in Boomtown at no cost. Boomtown is a simple to use mobile web app that uses the DSR score to rate 15,000 suburbs on their potential for short-term capital growth. It also makes it easy to focus your research by cherry-picking the best suburbs deserving more of your attention. You can also apply for competitive mortgage offers from various providers linked to the score in your chosen location. You can also make direct contact with our partners that use the score and other proprietary research algorithms not available in Boomtown for identifying strong investment opportunities. This service is popular with time-poor investors who surround themselves with fee-based professional advice and advisors.